Good morning, I'm Amber Takar at Weiss Research, and this is your morning market update for Thursday, October 20th. Jen and Andy are out today. This morning, third quarter earnings continue to pour in. AT&T said profit fell 71% compared to the same period last year when it had a big gain from an asset sale. The number 2 U.S. mobile provider is looking for regulatory approval to buy T-Mobile USA. The stock opened lower. Third Bancorp reported earnings shot up 60%. Its chief executive added that while the current environment is characterized by a significant level of uncertainty, particularly related to Europe, Fifth Third is delivering solid results and expects to continue to do so in the future. We do not have significant direct exposure to Europe, particularly the peripheral nations of most concern. The stock is higher at opening. Ingersoll Rand said that its profit fell to $86 million from $232 million a year ago. This is and was significantly lower than analysts' forecasts. Philip Morris announced its profit increased to $2.38 billion from $1.82 billion a year ago, beating analyst estimates. Automotive retailer AutoNation also beat estimates with a 24% jump in earnings. The Fort Lauderdale-based firm said its board authorized the repurchase of an additional $250 million of stock. This would bring the total remaining amount authorized for repurchases to around $316 million. Eli Lilly's profit dropped 5% on a 9% boost of sales, including a 29% increase in its antidepressant Cymbalta. Allstate said there were 7 catastrophe events in September. Consequently, it estimates a catastrophe loss for the month of $215 million. And the insurer foresees a $1.1 billion loss for the third quarter. The Labor Department reported jobless claims for last week. Applications for unemployment benefits fell by 600 to 403,000, and that's a little higher than many analysts expected. In Europe, the stock markets continue to drop. Investors are concerned that Eurozone leaders haven't made substantial progress in hammering out a deal to tackle the sovereign debt crises. And the German government slashed its growth forecast for the next year to 1% from 1.8%. The economics minister said the downward revision reflects risks for international environment with increased uncertainty due to the Eurozone debt crises cooling the pace of global growth. That's the latest from Weiss Research. Have a great trading day.